Hey, I'm the MLO study queen. If you're studying for the NMLS exam, this video will save you time. Let's get into it.
Who actually enforces the mortgage laws we've been talking about? Meet the CFPB, the agency that keeps lenders in check. The Consumer Financial Protection Bureau, or CFPB, was created under the Dodd-Frank Act of 2010. Its primary purpose is to protect consumers in financial transactions, especially those involving mortgages. Their job is to ensure lenders, servicers, and brokers adhere to federal laws like TILA, RESPA, and ECOA. They also work diligently to stop unfair or deceptive practices within the financial industry. The CFPB collects consumer complaints, issues fines, and creates rules to maintain transparency in the mortgage industry. So, if you ever wondered who enforces these crucial rules, now you know. It's the CFPB, dedicated to keeping it fair for both borrowers and professionals alike. Learn fast. Pass confidently. Let's talk about TILA, the Truth in Lending Act, also known as Reg Z. This law was designed to protect borrowers by making sure lenders clearly explain the cost of credit. TILA is what triggers key terms like your APR, finance charges, and, if you're refinancing, your right to rescind. That right to cancel applies to owner-occupied refinances only, and you get 3 business days to change your mind. It also requires lenders to give you 2 key documents: the loan estimate and the closing disclosure. Both are designed to help you understand your true loan costs. And here's a simple way to remember the timeline: the 373 rule. You get the LE within 3 days of applying. You must wait 7 days before closing. You get the CD 3 days before you sign. Follow for more MLO study breakdowns. I help you learn fast and pass confidently. Let's talk about the general provisions of Regulation B, also known as the Equal Credit Opportunity Act, or ECOA. Reg B makes it illegal for lenders to discriminate against an applicant based on race, color, religion, national origin, sex, marital status, age, or because they receive public assistance. It also requires that lenders notify applicants of a credit decision within 30 days, approve, deny, or ask for more information. Another key rule: borrowers have the right to receive a copy of their appraisal report if they request it. So remember, Reg B equals fair lending, timely decisions, and access to information. And that's your 60-second mortgage knowledge boost. Follow for more MLO study queen breakdowns. I help you learn fast and pass confidently.
Let's break down the primary versus secondary mortgage market. In plain English, when you go to a bank and get a mortgage, that's the primary market. You're borrowing money directly from the lender, but after that loan is closed, the lender might sell it to Fannie Mae, Freddie Mac, or investors, and that's called the secondary market. Why? So the lender can get their money back and lend to the next person. The primary market is where loans are made. The secondary market is where loans are sold. Remember, primary equals people. Secondary equals securities. Follow for more real talk about the mortgage game.
What is the SAFE Act and why does it matter? The SAFE Act, Secure and Fair Enforcement for Mortgage Licensing, was created after the 2008 housing crash. It makes sure every mortgage loan originator is licensed, trained, and background checked. It protects you, the consumer, from unqualified lenders and fraud. To pass the NMLS exam, remember, SAFE Act equals accountability, education, and protection. It's the foundation of everything we do in the mortgage industry. The SAFE Act mandates that all MLOs be licensed or registered through the NMLS, including passing a national mortgage test. Aspiring MLOs must complete at least 20 hours of NMLS-approved pre-licensure education, including specific hours on federal law, ethics, and lending standards. MLOs must provide fingerprints for an FBI criminal history background check and authorize the NMLS to obtain a credit report. Follow for more 60-second lessons before your NMLS exam. Front-end and back-end DTI confuse a lot of people on the NMLS exam. Let me simplify it. DTI stands for debt-to-income ratio. Front-End DTI looks at housing costs only, your mortgage payment, taxes, and insurance. Back-End DTI looks at your total monthly debt, housing plus credit cards, car loans, student loans, and other obligations. Exam tip: front-end equals housing, back-end equals everything. If you remember that, you won't mix them up. Follow MLO Study Queen for mortgage concepts explained simply. If LTV confuses you on the NMLS exam, this will clear it up fast. LTV stands for loan to value ratio. It tells lenders how much of the home's value is being financed. Here's the math. You take the loan amount, divide it by the property's value or purchase price, then multiply by 100. For an example, a $180,000 loan on a $200,000 home equals a 90% LTV. A lower LTV usually means less risk for the lender. LTV shows up often on the NMLS exam, so make sure you know this formula. Follow MLO Study Queen for more NMLS math explained simply.
Thinking about buying a home, and then you've probably heard of something called PMI, but what exactly is it, who pays for it, and how can you avoid it? Let's break it down. Fast and simple. PMI stands for Private Mortgage Insurance. It's a fee lenders charge to protect themselves when your down payment is less than 20% of the home's value. Here's the deal. PMI doesn't benefit you, the buyer. It protects the lender if you default. But guess what? You pay for it, usually as a monthly premium added to your mortgage. So who pays PMI? If you're putting down less than 20%, you do. It's not optional. Want to avoid PMI? Here are 3 smart ways. 1, put down at least 20%. 2, look for lender-paid PMI, but watch for higher interest rates. 3, consider VA loans if you're eligible. They don't require PMI at all. Bottom line, PMI helps you buy a home with less money up front, but it comes at a cost. Knowing how it works gives you the power to make smarter home buying decisions. Got questions about PMI or home loans? Drop them below, and don't forget to like and follow MLO Study Queen for more home buying tips. Think interest rate tells the full story? Think again. APR stands for annual percentage rate. It shows the true yearly cost of borrowing, interest plus fees. 2 loans with the same rate can have very different APRs. APR equals interest plus loan fees. Compare APRs to see the real cost. Choose the loan with the lowest APR, not just the rate. Follow MLO Study Queen for more no-fluff mortgage breakdowns every single day.